But Chris, why don't we stay firmly focused on equities, because they're really telling an interesting story today. Chris Conway from the Australian Stock Report joins us live from Melbourne for more. Chris, big gains being seen, relatively speaking, here in Australia and around the region. So do you think that this is a bit of bargain hunting happening?
Good afternoon, Nadine and Chris. Yeah, look, I certainly do think it's nothing more than a little bit of bargain hunting. It's worth remembering how we found ourselves in this situation. So obviously reporting season ended, and it seemed like the narrative was that this may be as good as it gets, and Australian investors really didn't have too much more to be excited about. And what has happened in the interim on a macro level is that threat of a trade war has turned into more and more likely becoming a reality, with those dates about to be tripped for when Trump wants to impose, the 50 billion, 200 billion, and I think now he's labelled another $267 billion of tariffs on Chinese goods. So something that was theoretical and maybe being thought of as a scare tactic by the US, as I said, has become in that period closer and closer to becoming a reality. That precipitated the falls, 8 sessions in a row, as we all know. And I think, as I said, it's just a little bit of bargain hunting. One need to only look as far as the tech sector. Some of the names in that sector which had been market darlings and had reported well have fallen sort of 20 to 30% from the highs to the lows of the last 8 sessions. So, yeah, I think there's some money moving back into those sorts of spaces.
Yeah, Chris, really interesting you bring up the tech stocks, because I know that you see some buying opportunity potentially there. Can you kind of elaborate on that a little bit?
Certainly. So we actually added NXDC this morning. We weren't the only ones to do it. There was another broking house out there that will remain nameless that also slapped an upgrade on and a buy rating. We think this is, a really well-run company that has ongoing revenues. Their results we thought were quite solid, but there was some speculation about the utilisation rates, or some concern about the utilisation rates at their second Melbourne and Brisbane facilities, their Tier 4 rather than their Tier 3 facilities. And they hadn't had any major contract wins in the first half, which again saw investors worry a little bit. We just think the sell-off from the peak to the trough, which was about 30% at the lows yesterday, from that high above $8 a couple of months ago, 30% sell-off, we think that's overdone, and hence provided a buying opportunity. Subsequently, why we were happy to add to it this morning. But we have had some other names, as I said, in that sector that have sold off aggressively. You'll forgive me for referring to my cheat sheet, but the likes of Appen down 17% peak to trough, Altium 20%, and Afterpay 35%. So we think there's some opportunities there.
Okay, so yeah, on days of weakness, because we've seen some buying in those names today and yesterday in particular. I'm curious, I guess, to move out of that sort of well-trodden area that we've been talking about, I'd like to get your thoughts on maybe something in the commodity space. From memory, you're not really big on some of the big miners, given where we are in this global growth cycle, but you're still very much an oil bull. Correct me if I'm wrong, Chris. So if you're looking at plays in the Australian market, where do you look to, and why are you still so bullish on oil?
So I think the supply and demand fundamentals in the oil market remain favourable to higher oil prices. One need look no further than the Saudis, who obviously swing a big bat at OPEC. They're listing 5% of Saudi Aramco at some time in the not too distant future, so they have obviously a very significant vested interest in making sure those oil prices remain high, and that's reflected in the fact that they have pushed for production cuts. I think they're already out to 2019, and I had heard some commentary that they were agitating for extending those production cuts as well. Even managed to get Russia on board, who isn't even an OPEC nation, so it just goes to show you, as I said, how big a bat they swing at that table. So you have supply side restrictions, and then if we all continue to believe in the global growth story, obviously being led by America, then demand should be picking up as well. So, it's nothing more elaborate than sort of supply and demand 101, where if you restrict supply and demand goes up, prices can only move in one direction. Obviously, we've seen a little bit of a trough in the cycle. Oil prices were up around, I think, 74 for WTI and have pulled back. So we just think that creates a buying opportunity. It's sort of reflected in the names like Woodside, which had fallen sharply from their highs but have bounced back over the last couple of sessions. Also bouncing back today despite WTI being down 0.3%. But we just think that thematic has a little bit longer to play. And I have been on record as saying that I wouldn't be surprised to see oil, that's WTI, have an 80 handle at some time before the end of the year.
Really interesting, Chris. I'm curious to get you back to some of the big headlines in Australia at the moment around class actions for whether it be Woolworths or big bank-backed super funds. I'm sorry, that's a mouthful. But do you think that that there's a lot to be taken here from the market? I mean, how are people kind of absorbing this news?
Look, in the case of the banks, it is another negative, but I think, this is a shocking thing to say, but I think we've sort of become accustomed to the banks taking hits. And the quantum for me doesn't seem like it's going to move the needle. Don't get me wrong, it's not insignificant for those people who have had money, if the allegations are true, essentially taken from their super accounts. But, the suggestions are that the quantum is between $500 million and $1 billion. These things generally get settled before going to trial anyway, because everyone wants to avoid the costs of a trial. And then the lawyers usually take about 30%. That's about the clip that they get. So the actual investors don't get left with much. And then if you put that amount in the context, well, spread over a couple of firms firstly, most likely CBA and AMP to begin with, if they're found guilty or they come to an agreement, you put it in the context of their balance sheets, it's really not all that much. So I don't think for investors it's anything they need to be particularly worried about. But again, with the banks and the financial players at the moment, it seems to be death by 1,000 cuts.
Yeah, it's interesting though, because we talk about the big banks in this country and immediately Westpac, CBA, ANZ, NAB come to mind, but then there's another big bank out there, and that's Macquarie, out with a bit of an update ahead of a presentation being made in Hong Kong today, reaffirming its full year guidance, saying that interim results would be broadly in line with the same time last year. Is this a classic case of Macquarie being a little bit vague and also perhaps under-promising to only over-deliver, given there's a new CEO and everything else besides?
Absolutely, Nadine. Yeah, you took the words out of my mouth. They have a history of doing this. They don't want to get the market too G'd up. And the market has sort of become accustomed to seeing Macquarie do this, and then later in the year, not even necessarily upping their guidance in terms of providing numbers, but providing some commentary that, yeah, maybe things are going a little bit better than what we had previously anticipated. But of course, the other element to it is with a new CEO coming in, they won't want to set the bar too high for her. She'll obviously want to get a good first set of numbers under her belt as she begins her tenure of what will likely be, if it's anything like Nicholas Moore, the best part of a decade. So they won't set her up to fail by any stretch of the imagination. But like I said, I think that the more important thing is they have a history of doing this. The thing that's sort of noteworthy is that they haven't included in any commentary today in the presentation about the sale of Quadrant, which they stand to make about $250 million from, minus fees and commissions and a few other things. But it's about 10% of what they made last year. So already they seem to have 10% of what they made last year in the coffers, which you would think would set them up pretty nicely to again beat the numbers from last year. But they won't say it until they're pretty confident that it's a reality.
Chris, I just wanted to change you over to telcos for a minute. They're kind of fighting back a little bit at the moment after being thrown around a bit. What's your view there?
Chris, unfortunately, I have still a fairly negative view on telcos. It's such a, we all know this, a hyper-competitive space. Obviously, with the merger between Vodafone and TPG, it does create another larger, well-financed entity that is likely to compete vigorously if they take any of the playbook instructions from David Teo, who usually that was the major plank of his competition, was price competition. So yes, while the space is being rationalised and the number of players is being reduced, we still have a very finite number of consumers here in Australia and probably too many competitors competing for their business, which can only create margin pressure. So has been the worst performing sector on the ASX over the last 2 years. I won't label it that it's likely to be for the next 12 months, but I can't see it moving up towards the top of the best performing sectors. And then it comes down to opportunity cost. Are there better opportunities that you could be putting your money into out there? And I certainly think there's plenty.
Well, today, Telstra having a good day, up by 2.7%, TPG up by 3.4%. I'm not saying that to prove you wrong. A market is made every day over and over again. And back to the 200 because 0.6% higher right now. Talk to us about technicals. Last time we spoke, we were talking about 61.50. We did go below. We did breach that support level. Obviously above it today. But yeah, what do you make of where we're finding support, or where do we look technically now?
So really happy to see that we have reclaimed that 61.50 level, Nadine. 62.30 was sort of the short-term support. Obviously that got absolutely obliterated. 61.50 was sort of the major one. And yeah, as you say, we did breach below it, but there was, if you look at the sort of candlesticks, there were some tails that showed that we did spike down through 61.50, but the bulls fought pretty hard to try and recover that level, and obviously we're recovering it with some vigour today. So for me, just for the bullish structure of the market, from a technical perspective, that's the level that we need to continue to defend. If it fails, I think we move back to probably 6,000. And then obviously that's a major psychological level. So yeah, if we want to maintain this bullish structure, we need to keep our heads above 61.50.
Yeah, certainly would be scary if we went back to 6,000. Chris Conway, we're going to have to leave it there. Thank you very much for your time.
Thanks, guys. Appreciate it. Cheers.